Morning, guys. It's Thursday, May 15th, 5:26 a.m. Central Time. Grain markets are mixed to lower this morning. July corn futures down 3/4 of a cent at 4.44 3/4. July soybeans down 14.5 at 10.63 3/4 last trade. July Chicago wheat down 1/4 cent at 5.24.5. July Kansas City wheat unchanged at 5.23. July spring wheat down 3/4 of a cent at 5.76 1/4. We've had kind of a series of events unfold in the soybean market over the last 24 hours or so. Let's start there.
Soybean futures advanced yesterday. The July 25 contract edged higher for the fifth consecutive session, gaining roughly 5 cents to settle near 10.78 per bushel. The rally was partially fueled by the temporary 90-day tariff truce between the U.S. and China. Futures also found support from a House proposal that would extend the 45Z tax credit, which could bolster demand. Some traders are hopeful that China will be willing to return to the Phase 1 trade agreement or a similar deal aimed at boosting agricultural exports. Also on Wednesday, corn futures were mixed, while wheat futures rebounded.
Okay, soybean futures closed higher yesterday. It was a really good looking close. But we're sharply lower here this morning. Let's go right into the next story and then we'll discuss.
So the EPA is expected to finalize the rulemaking process for the renewable fuel standard in the coming months. EPA Administrator Lee Zeldin announced the timeline during a hearing on Wednesday, stating that the agency will set new renewable volume obligations, RVOs, in the coming months. He also emphasized the EPA's commitment of meeting future statutory deadlines for RFS rulemakings. A public comment period will take place in the coming months, allowing stakeholders to provide input before the final rule is issued. Zeldin mentioned that many groups are already pushing for higher RVO levels.
All right, here's the deal this morning. Soybean oil futures are down sharply. We're down like $3. It's like a 6% move. It's a massive move lower in soybean oil futures. We had a soybean oil rally, a string of higher closes on biofuel optimism. There had been these rumors floating around about RVOs, renewable volume obligations. They were going to be strong and they were going to help to drive demand for soybean oil. Now, Lee Zeldin comes out and says that stuff's not coming for a few months. I also read, and this was actually printed in the wires this morning from a Reuters piece overnight, rumors of lower than expected targets for biomass diesel mandates and delays in biofuel tax credit rulemaking are adding to market uncertainty. So I guess the rumor mill has shifted. The winds have shifted here. We had positive rumors, and now we've got negative rumors. There was also some chatter that perhaps today's NOPA crush report had leaked. There's a NOPA report out later this morning. And NOPA, I don't think they're like the USDA in that they have a lockdown period. I'm not sure exactly how the reporting process works, but to say that report could have leaked, I mean, maybe that's something that's possible. Also, crude oil trades sharply lower this morning following a surprise U.S. inventory build. So because soybean oil futures are down, again, like 6% this morning, soybean futures have been dragged lower to some degree. Beans are down 14.5 cents in the July contract as I speak here. And that is largely due to the sell-off in soybean oil. So I don't know exactly the reason why soybean oil futures are down 6%. I have a few ideas. Maybe we'll hear a little bit more about this later today.
Earlier this week, the Kansas Wheat Tour reported its highest first-day yield estimate since 2021. Crop Scouts are estimating an average yield of 50.5 bushels per acre for HRW wheat in northern Kansas. The estimate exceeds both last year's 49.9 bushels per acre and the 5-year average of 45.1. Despite the improved outlook, crop conditions varied widely, with some fields being stressed by drought, while others showed signs of wheat streak mosaic, a viral disease. Then on Wednesday, scouts estimated an even higher average yield of 53.3 bushels per acre for the southwestern portion of the state. The estimate is well above last year's 42.4 bushels per acre and the 5-year average of 42.3. The tour is scheduled to release its final yield forecast today.
This all kind of jives with what we've seen on the weather front and also what USDA has told us with regard to crop ratings. The Kansas wheat crop as of Sunday was rated 48% good to excellent. The 5-year average is 31% good to excellent. And I think you mentioned that these were the best findings since 2021, which is the only year out of the last 5 that the ratings were better than they are this year. I know that I've heard from our subscribers that there are some virus issues. That wheat streak mosaic thing is the real deal. And the weather in Kansas, as it relates to winter wheat or otherwise, is never perfect. There's always a drought. It's always too hot. It's always too cold. It's a tough place to be. So in any case, it looks like the crop is probably better than average.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about yesterday's premium video with Matt Bennett?
Matt Bennett was on yesterday. We did 20 questions, which was actually 30 questions. Why are corn prices down, among other things? Lots of very good grain market and grain marketing questions that came in from our premium crowd. We had a whole section on just corn and soybean marketing that lasted about 25 minutes. We had some stuff on cattle. We had some stuff on cost of carry. We had some section on wheat at the end. We talked about fuel needs, number of things. A couple of our subscribers are big Matt Bennett haters. And they're like, oh, Matt lives in Illinois and he's got it so easy. And we had to address some of that because Matt in his neighborhood, they're actually pretty slow with planting this year. And people were like happy about that, which is weird. I guess I told Matt, I said, they hate you because they ain't you, buddy. One of those things. In any case, if you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. It's information only. We don't sell anything else. We don't want to sell you brokerage. We don't want to sell you crop insurance. We don't want to call you. We don't want to give your phone number to anybody. We just want to sell you our info for $50, and that's it. You can sign up on your phone. It takes about 30 seconds. We'll send you 2 emails per day, one at 5 a.m., one at 10 a.m. You can jump on our text message service if you want. Give that deal a shot this morning, guys.
The impact of May frosts on Russian crops has been minimal, with only about 247,000 acres affected, which is roughly only 10% of the damage seen last season. The primary concern now is a lack of moisture. If adequate rainfall is received, it will likely offset these minor frost-related losses. Last season, severe frost and drought conditions led to significant crop losses, resulting in a 10% decline in Russia's 2024 grain production.
Just to be clear, most of our subscribers love Matt. There's like 3 of them. There's like 3 of them that like send me this nasty stuff, and it's what it is it's the law of large numbers. Like you have enough people watching something, and you're gonna get a few that just like they're gonna send you the mean stuff, or maybe it was I think a lot of it's just sarcasm at this point. But the same stuff happens with our YouTube comments. We get mostly positive YouTube comments, and then you get a couple people who are like, "You're an idiot. You don't know what you're talking about." Blah blah blah, and that may be true. Okay, back to Russian wheat. So not significant damage from the frost. Russian wheat production has been down and will be down a little bit versus what we saw just a couple of years ago. They've had some weather problems basically, but they're still going to be should be the 4th largest wheat producer and should be the largest wheat exporter. Although some of the private groups out there have suggested that this wheat export number for new crop, which USDA has got at 45 million, could be like somewhere in the upper 30s, depending on where you believe the crop is. So there's a lot of like kind of conflicting opinions, but USDA started off with the 45 for exports, which would again make Russia the global price setter and keep them kind of at the top of the export market.
Tyson Foods claims that the U.S. cattle herd is in the process of being rebuilt. According to the meat giant CEO, some producers have already started rebuilding and others are expected to soon begin. However, despite Tyson's optimistic outlook, several challenges will likely hinder herd expansion, such as ongoing drought conditions, along with a high-risk environment and limited access to capital, particularly for younger producers. Additionally, record high cattle prices have reduced incentives for producers to retain breeding stock. Last week, Tyson reported a $149 million adjusted operating loss in its beef segment, largely driven by record high cattle prices. With all that being said, the live cattle market posted a downside key reversal yesterday.
So the cattle numbers are very, very low, as we know. Is this the Tyson CEO saying what he would like to see happen? He'd like to see the herd rebuild because they'll make more money that way.
Yes.
And they're not making money with the numbers the way that they are and the cattle market the way that it is.
Yes, no doubt about it.
He's talking his book.
In my opinion, this is just wishful thinking because obviously they are bleeding red ink right now. We have record high fat cattle prices. We all know that. And yeah, maybe we are slowly starting to rebuild. There have been some signs of that, but the
What
rebuild.
signs?
So, for example, in the most recent cattle on feed report, it showed that the quarterly heifer inventory was roughly 4.4 million head. That was down almost 4% from last year and the lowest since July 2021. So, this obviously shows that some heifers are being held back, but this is really the only sign that we've seen that there is some kind of herd expansion.
I've always been told that cattle is cyclical, and just looking at this chart, and this is not a big sample size, but you had your kind of contraction from say 2007 through 2014, and then you had everything build back up, and now we're back down, and it probably will build back up again. It's a question of timing. I feel like the comments from Tyson though, like, should be viewed through the lens of, hey, this is a guy who would probably like cattle prices to be cheaper, you know?
Oh, no doubt about it. And also, as you can see kind of in this chart, the herd rebuild every time is just a little bit smaller. We never get back up to where we were. So, in my opinion, I think we could only see about like maybe a million more head added back, and that could be considered herd expansion. Because again, we've seen a lot of guys drop out of the game with these high cattle prices. A lot of the older generation, it's a great time to get out right now. So, and there hasn't been younger folks to step in and take that place because they're just not able to financially.
So if it's a good time for the older guys to get out, it's a bad time for younger people to get in. It's just too
Oh,
expensive.
it's darn near impossible in my opinion.
Yeah. On another note, August live cattle futures posted a downside key reversal yesterday, which doesn't have to mean anything. I mean, 60% of the time it works every time. We had a downside key reversal in like mid-March, and yeah, we corrected a little bit and then we rallied right back. So sometimes it matters, sometimes it doesn't.
U.S. ethanol production declined last week. Weekly output of 1 million barrels per day was down 2.6% on the week and down 1% versus the same week last year. Ethanol stocks were pegged at 25.5 million barrels. The print was up 1% compared to the previous week and up 3.9% compared to the same week last year. Although stocks have retreated from near record highs reached in recent weeks, they remain historically high. According to Reuters data, U.S. ethanol production margins have strengthened in recent weeks, with the most favorable margins being reported in the Eastern Corn Belt.
The production number is fine. The stocks number is a little high for my liking. I'm told that these ethanol plants are pushing basis a little bit. If you're a farmer and you're still sitting on old crop corn bushels, you just really don't have much of an interest in selling right now. The board's down. You've got an ongoing planting campaign. It's just not an attractive proposition. Now, we've been told that a lot of these commercials are covered and well covered, perhaps even through the summer, but that's certainly not all of them. And apparently, based on what I'm seeing in basis and some of the pushes at these plants, that they're not all covered through the summer by any stretch of the imagination. We talked about cattle outside markets this morning. The Dow Jones is down 160. The S&P is down 30. A little bit of back and fill. Crude's down $2.30. The U.S. dollar is off just a little bit. Have a great day, guys. We'll be back on Friday.